Alright, so I messed up the first recording of this, so I'm going to go extremely quick just to get this video out and done today before the closes market. As a reminder, of course, not financial advice. You should not base your trading strategies off of what I am doing with my trading strategies. This is here as education. It's for you to learn, to look at how someone else might set up their long-term trades. So let's dig in. Castor Maritime, it's CTRM. It's listed on the NASDAQ. It recently bottomed out around 11 cents, which was extremely cheap. I actually missed the absolute bottom, but I started getting back in between the 14 and 17 cents range, and now I've just kind of been playing and watching the moves up. Why am I so excited about this one? Well, if you see on sort of recent history, it looks like we have a pretty strong indication of sort of head and shoulders pattern where we've got a sharp decline, long period of consolidation, followed by a sharp incline, sharp ascent. Obviously, you want to miss the declines, hit the inclines. So here, if you got in at the 17 cents range, which I'm just going to say where I've got this line, if full retracement on the head and shoulders pattern, you'd be looking at a potential 287% return. So just phenomenal potential return in this one. As you can see, we've already started the move upward. We're sitting at about 40 cents a share, which so far is about 138% increase over this sort of average point where I started my play. Frankly, I think like in a market that's doing okay, you should be looking for these types of plays, things that have consolidated near the bottom, but look like they're not going to go all the way down. CTRM has had some sort of good news recently. At the beginning of the month, they indicated they were going to buy another transport vessel. You can see over here, it's a marine shipping company. They currently own six goods carriers, whatever, transport carriers, cargo ships, whatever you want to call them. And they announced at the beginning of January that they're going to finance an extremely large new vessel to add to the fleet. My wager, back in November was eventually trade's going to kick back up. Eventually, the economies are going to start exchanging more, and the demand for maritime shipping will drastically increase, especially if you are buying more vessels and using this period of time to position yourself for whatever's next. So that's kind of what I'm looking at on this trade. And relatively straightforward here. I don't think there's anything too fancy going on. If you wanted to look at something like fib retracements, you'll notice like we're even pretty close on these lines. Like we've got you're almost right on the line for the first retracement. Then there's a couple more in there, pretty close to the line on the 40 cents mark, and then even all the way back up to the 67 cents mark, you're getting pretty close. I tend to avoid using retracement because I think it actually ends up telling you a lot of the same things as support and resistance. But if you want to do that, you can, and it tells you a relatively similar story. All of these sort of trading patterns are going to tell you relatively similar stories when you see something that looks like this. It's either going to go up and it's either looking back to where it was, or it is going to continue consolidating around zero. There is a world where this is a dead cat bounce and we go straight back down, in which case from this price, you do need to be careful when you're trading, because if we return to where we were, we retrace back down, that's a 56% slip. So keep your eye on it, and I'm going to go ahead and put this out there. And if you have any comments on this trading strategy, or you think that it's interesting, just let